You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time to rock out once again with the option block. My name is Mark Longo. I will be your host for this hour-long journey through the world of all things options. We'll talk about what's trading today, maybe what's on our eye in terms of, or what's on our mind in terms of weird, unusual activity. Maybe we'll flip the script a little bit, get Uncle Mike to do a little bit of strategery here on the old Monday edition of the show, wrap it up with some questions, and peering into the future, all sorts of good stuff. Glad you could join us on this hour-long journey known as the option block. Of course, you guys can always get the podcast, iTunes, TuneIn, Stitcher, our website, our mobile app, all those good places if you want the live in your ear holes version. Mixler every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. However you listen to either one of those, make sure you hit us up, questions, comments, insights, and make sure you play along with our polls. We put a lot of polls out and questions of the week out there all the time via Twitter. You can always see them in other places too, but the actual polls are run on Twitter, so head on over there at Options if you haven't done so already and take part because it's kind of fun. And we'd like to see what you guys are thinking about. Let's see who else, what they're thinking about too. Let's spin the old option block all-star wheel. Let's see who we land on. Let's spin it. Oh, here we go. First, way off, way out. Barely. You're just about at the shoreline, listeners. You're almost outside the continental United States. But before we get all that way out into international land and international waters where there is no law, we stop just short of that to the Grand Giovinazzi compound in Maine, where we are joined by the Rock Lobster himself, Mr. Andrew G. Mr. G, must have been tempting to you to just continue going all the way out there, like, what's it, 12 miles, and then there would be no law but your own, sir.
Well, when you're an island unto yourself, you're looking for that special lawless area. So it's funny. There are little islands out there, and there are humans inhabiting those islands.
There you go. See, just
like
keep
the
going.
lobstering communities. Yeah.
You're still in too much society and civilization. You need to get out there a little bit further and make your own law. You're not a man until you make your own law. There we go.
I'll remember that.
Yes, words to live by, or perhaps in this case, die horribly by. Let's move on away from that very quickly out to a quieter hamlet where they kind of make their own laws and they all representatively participate by raising their hands because it is a nice, happy democracy out there. St. Charles, Illinois, where we are joined by Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show. How goes the lawmaking in scenic and sunny St. Charles?
Hey, I'm happy with the laws with which they have, so they don't bother me, I don't bother them. It kind of works well that way.
There you go. Know what else works well is a little bit of the trading block, so let's dive right into it.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the show we break down what was traded. What the heck was actually bipping and bopping on the old screens today? Seemed like it was bipping for a while, then it kind of bopped to the downside. End of the day, kind of like, well, we don't know what's going on. Let's just That's kind of how, pretty much how you can sum up today's price action. Was looking a little nice in the morning with VIX cash taking a break, markets getting a little bit of a boost, and they both tended to converge as the session progressed by the end of the day. It's pretty much red on the screen, but not really a lot. The S&P is kind of pretty much unched. The Dow's pretty much in that category as well, though slightly to the downside. Tech-heavy NASDAQ off a little bit more, about 0.3%. But VIX, after actually turning positive at one point intraday, ending the day right around, the 16.5 level. Got as high as 1730 intraday. Got as low as about 1580, 1579 down there. So quite the range in VIX cash land, as everyone was kind of figure out what they wanted, what was going on, what was driving the market to. A lot of people also waiting for some big names to pop off after the bell, including our old friend Alphabet. We'll get to all of that in a wee bit, but first, let's go back to that land of lawlessness known as Maine. And while he's not busy creating his own little fiefdom out there, he also does a little bit of market watching and trading every now and then. Mr. I almost said Greasy Meatball. Mr. Rock Lobster, what is catching your eye in today's activity, sir?
The biggest one was the VIX up, VIX down, vol futures down, vol futures crushed. Could not decide what was going on for vol. And I've had this kind of little pet thesis for about 2 weeks, thinking the vol's not coming down till the tech earnings are out. And Apple has been getting slapped upside the head lately. I am sure Mr. Tosaw will comment on that, which I think is pretty much dragged the market down. Because when Apple doesn't do well, the market kind of stinks a little bit. But Google looks like decent earnings. The bank earnings were really good for the most part. So I would expect to see the vol come down a little bit. We got a little bit of the interest rate thing going, but in general, I am looking for like a 14 VIX by the middle of next week if the earnings stay decent. Because again, we're going to need a reason for vol to stay up here, I'm not seeing it because all of a sudden things were going crazy for the last, 2 months or so, and there's just a lot less crazy. I think that's the biggest thing. I don't think Washington's any less crazy, but I just think the market's reaction to it. The market is starting to absorb it a little bit. Let's put it that way.
Absorbing things like you absorb the laws of man, sir, and then just spit them out into your own hybrid monstrosities out there in the islands off the coast of Maine. Let's get away from that before we get to our own little island of Dr. Moreau here. Let's go back to the quiet, tranquil land of St. Charles. Uncle Mike, a lot of things were interesting today. Kind of a little bit of a shoulder shrug out there in terms of what the heck was actually going to happen. We ended the day settling slightly south. What caught your eye in today's activity, sir?
Well, I would say one of the big things that I'm seeing right now, 10-year yield going to the we closed below it, but I think one of the big stories right now is the 10-year yield and 3%. The last time that we've had the 10-year note with this high of a yield, I'm showing, I believe it was in January of 2014. So it's been a while since we've had that kind of heightened interest rate. And I can remember when we were doing the show back then, one thing that we were saying is that, well, the Fed's not necessarily raising rates, but the market's deciding to raise rates on themselves. They don't need no stinking Fed. I remember when that was kind of the joke that we had on the show at the time. So that's one thing that's definitely of note. Of course, Alphabet, it looks like they just beat earnings, which I'm sure you'll talk about in a moment. So that's going to be another story. We have more tech earnings coming up in the next week or so. I believe Apple's is on, and this is seriously now, folks, May 1st. Longo likes to lie about certain things. Not many things. He's a pretty honest man, but when it comes to Apple earnings, the man's very dishonest and deceitful, I must say. But Apple earnings are coming out next week. So we have that to look forward to. The other point of note right now is the metals getting the crap kicked out of them today. So silver is down almost 3% on the day. So it's still kind of going back to, it's kind of being an exciting road to nowhere for me. With the collar, with which I'm pretty much doing nothing on. And it's pretty much right back to where it started from when I got into it over a year ago when we talked about it on this show. So and that's the underlying, of course. So really not a lot happening there, but yet a lot is happening there. So we have that going on in the marketplace today. Also, in terms of what sectors are performing well and what's not performing well, energy continues to go higher. We continue to have, I'm showing XLE today up over 0.5%. So we have that going for us right now. Excuse me. Oil is also up on that. So curious to see, there's a lot of things that are coming up in the next couple of weeks with more tech earnings. We have, if the 10-year touches the 3% level, that's kind of a big deal in terms of what the market looks at a lot of times. Now, it may or may not be, but a lot of times it has been in the past. So it'll be interesting to see, with yields higher, can oil prices maintain the levels with which they're at, and can the market sustain the levels with which it is? Combine that with the Fed potentially threatening to, or not threatening, but looking like the Fed going to raise rates more. This is going to be an interesting picture, and there's a lot of things that could go in a lot of different directions, to be definitive, of course.
Yes, very definitive of you, sir. Speaking of commodities and the metals, which you are threatening to do stuff. So, one second you do that, those metals are just going to turn around quite a bit. We've been talking a lot on TWIFO for a long time about how metals, particularly gold, has kind of been in the toilet. Sounds like you've been discovering something similar out there in rock lobster land, Mr. Rock Lobster. What's been catching your eye out there in metals vol of late?
I think the vol is really, really, really low. So just looking at it with a client, looking at GDXJ vol, super, super low, given all the funk that's going on. So normally when I think vol's this low, it's like the market's taking one side of the equation out, and it just wouldn't surprise me if we saw some kind of lower numbers there. Tosaw's talking about higher rates, 3%. All of a sudden, gold doesn't look so good. We've had that kind of rally in the miners and all the gold since the beginning of the year. And maybe that inflationary stuff isn't going to materialize and the sell-off happens. But usually it's very, very, very low volatility for a product like that. That it's looking, and that everything is looking just like it wants to fall off a cliff a little bit in that complex, in the metals, at least like the precious metal stuff. So I find it interesting, to say the least. So it just doesn't look extremely bullish for gold in that respect.
Yeah, we've been saying for a while that gold in particular, looking at the vol cones out there, it's been hovering at or near, except for the last couple of weeks, it was at or near 5-year lows. Had a little bit of a rally out there in gold vol. It has since retreated, as it is wont to do. Usually doesn't really, those little rallies don't last too long when it comes to vol. And now we're seeing that reflected in the miners, which is, probably a little bit of a lagging indicator of the broad metal volatility across the board. Speaking of lagging, let's get into, we're lagging behind a little bit here on all things earnings right now. Big name popping off after the bell today. Good old Alphabet, the player formerly known as Google, of course, popping off after the bell. They closed right around 107, I should say, 1,074, pretty close to it. Let's see, they were pricing in about $54, so right around 5%. So far in the after hours, wow, the market was liking what they were looking. It was rallying. Now it's almost unched. It's only up a mere $2 in the after hours. It closed actually not even $2. It's up 40 cents now. It closed at 1,073.80, trading 10.78 actually now rallying a bit more, about $5. Kind of gapping all over the place as we see it in these. Every time I refresh, it's about 4 handles different here on the platform. Right around 10.75 is where it's settling out right now. So up slightly, about a handle or so, but still up fractionally, nowhere near the 5% they were pricing in. I can't imagine it's going to sit right here. If it does, it's one of the better premium sells in recent earnings history. Speaking of earnings volatility history, if you guys like this stuff, and I know you do, and there's a lot of big players coming out. In fact, I was just searching for myself while the Rock Lobster was talking. Our friends over there at Orats have been actually kind enough to put out all this data for you and crunch it all for you. You guys are always asking us, what's up with this name, earnings, and the implied vol, and how does this current straddle level compare to historical and their previous moves and all that stuff. Well, the ORATS guys heard you, and they're doing it, and they're giving it to you for free, which is crazy. You can find it on our site out there. Just search for ORATS or search for the earnings reports, or look at the unusual activity section, or just click on the author ORATS there on our site. You'll see all those reports coming up. A lot of earnings reports there. I was just scrolling through it. Unfortunately, for whatever reason, Alphabet is not among them. So I was hoping to bust up for you some great data on the previous move and the projected straddle, historical moves, 1 quarter, 4 quarter, all that kind of stuff. Unfortunately, Alphabet is not here, at least in the recent reports. But check it out, because there's about hundreds of names that are here, including we had E-Trade come out recently. They were on this list, a bunch of big names on these lists. So if you trade something, chances are it's included in these earnings move reports outside of Alphabet, unless I'm just missing it. Let me go back. He also posted something about a week ago. Netflix was on there, of course, a big one to break down. So I'm not seeing the old Googs here, which is interesting. So everything but Alphabet. It's already in the rearview mirror anyway. So if you're looking at planning some of your earnings trading, I know we always caution, or I should say counsel caution really around earnings time. But if you are one of those out there who likes to sling it, let the dice fly high around earnings time, then these reports will at least arm you. And quite frankly, this data is not really available anywhere else in terms of, there was like a Goldman study a few years ago, but outside ORATS really putting this stuff out for free. There's not a lot to it. You can find it at our site. Of course, you can head on over to orats.com. Find it for yourself as well. So far, we had of course some financials. We had Netflix, and now we have ye old Google. They hit a high. Looks like briefly they were up. Looks like about 30 odd handles at one point initially, right? An initial pop, and then that came off pretty quickly. So we'll see if that bloom is off the road. Oh, it's off in the after hours now. It's off 9 handles. So we're seeing quite a wide range here. As I said, I didn't expect it to sit there for too long. Mr. Rock Lobster, any of your hardcores, any of your crazies slinging any Google these days into earnings, or any other earnings really catching their eye right now?
We were looking at Google to kind of set the tone for tech earnings. And it looked pretty good. Like they had a pretty solid quarter, and now they don't like it anymore. Or, the fact that it's already a $10,000 or $1,000.73 stock, maybe that had something to do with it. But so we were looking. Nobody really had anything on per se that I can think of. But we'll see tomorrow. There could be some action tomorrow in it post earnings. But still 10% off its all-time high. So I don't know if it's exactly a bargain right now, but it was a big change from the earlier tone of the earnings, because the earnings still look solid. So maybe it will be an opportunity soon enough. Maybe we get a chance to sell some 1,000 puts or something like that. So we'll see how that goes. Put spreads, of course.
Put spreads, of course. No crazy puts. But if you want crazy puts, stay tuned, because we got you covered. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Also worth noting, TD Ameritrade reporting after the bell here. They closed right around 61 and change today, and they're off about $1.20 in the after hours, right around 2%. I don't have their straddle off in front of me, but it seems like the market not liking what they're putting out there either. So good old Googs and TD Ameritrade, both not feeling the love. Let's talk about some other names out there, see if they were feeling the love. Let's start off with our old friend, the home of our much ballyhooed mystery catastrophe puts. Yes, I'm talking about they who are stopping production for at least for a little while on Model 3s. The old Tesla closing today about 283 and change, off nearly 7 handles, or almost 2.5%. So back shy of that magical, mythical 300 level that everyone's always watching and writing and rolling puts around. So hopefully you learned your lesson from last time. Perhaps not quite as aggressive with your 300 put rights this time as you were about a month ago. But what was lighting it up out there in our old friend, the catastrophe puts? Were they indeed lighting it up today, or was it a quiet day on the catastrophe front? Let's see. Actually pretty active. Looks like actually active in the deep catastrophe as well. The Jan 2019 50s That's what kicked it all off. 367 of those going up today. They're only worth a mere $1.40 right now, so off about a dime from where they were about a week ago. Nearly just a little bit under, about 100 under the 50K level in OI on that strike. That's not far enough out of the money for you, though. The Jan 2019 20s, which are a fairly recent addition to the group here, doing 600 contracts today on the 20s. There's already 4,300 open on that strike now as well. So, yeah, they just continue to love any out-of-the-money put strike here in Jan in Tesla. Not so much in March, not so much in June. They don't really touch those. OI out here in the June in the 50s is merely 94 contracts. Then they go all the way out to Jan 2020 of the 50 puts. And once again, those pretty active, about $1.50 hitting the tape there. Almost 400 of the pars going up in 2020 as well. And nearly 300, 270 of the Jan 2020 20 puts. Say that 5 times fast. Those are lighting it up. Those are also trading around $1.40. So you can get your Jan 2019 50 puts or your Jan 2020 20 puts. Take your pick, either of them, for right around $1.40. Nearly already 1,100 open to those bad boys as well. So, Mr. Rock Lobster, I've seen a trend here, perhaps. People are saying, 50, not quite bearish enough for their tastes. They're going all the way down to 20. Is this the new Carmen line play here?
You like to think that we're going to buy those puts, but we are not. Very, very, very interesting on that score. We've seen that. We've seen the Model 3. We've seen all this stuff. Elon shrugged it all off at 250. Oh, yeah, we're going to go bankrupt, blah, 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 blah. And so far he has been able to, how should we say it? He's been able to just kind of laugh it all off without really a big problem. I think them not making them doing the Model 3, I don't see how that could be great news. Do you? If they stop, maybe we're not going to do the Model 3. Don't you think that would be?
I think they're playing it off as a temporary halt, but yeah, that's kind of their big one. That's the one everyone's been waiting for them, right? That's kind of the mainstream car finally from them. And yet, right. Apparently, and I guess he also came out recently and said, yeah, my bad, I doubled down on automation, but turns out people have value too. So he's apparently they over automated, so they can't. And now they're under delivering as a result. I don't know. I hear a lot of weird stuff about coming out of there. But either way, you're right. And if the options flow is any indicator, sir, and we know it tends to be sometimes 20 puts, sir. 20 puts in Tesla. 50 is not bearish enough. For all of you out there saying, this 50 puts just not out of the money enough. 20 puts, lighting it up. Clearly, you're not the only one thinking that out there, or at least you're not the only one out there selling a bunch of CDSs out there and then deciding maybe let's go 20. Why waste all of our money on these 50 handle puts when we can just spend it on 20s? It's still covering you, right? All right, especially if you're selling catastrophe, because 20 will cover you all the way down to zero. Speaking all the way down to zero, some names dropping off today, including a name I'm not sure if you've ever discussed this one. If you have, it's been a while. This is a local Chicago Bridge and Iron Company, ticker symbol CBI. Maybe they run the bridges right outside the studio here, always going up and down mid-show, causing all sorts of clamor and ruckus up here. They had earnings today, and I guess the market not liking the Chicago Bridge and Iron, what they had to say. They're off over 8%, closing today $13.38. It's the name that usually does a decent 4,500 or so contracts, doing nearly 10x that today, doing over 40,000 contracts. 3-to-1 puts over calls. Not surprising when you got a big sell-off day like today. Again, this is a name that does 4,000 contracts a day, and today was just lighting it up. Pick a strike. They were trading. The big trade out here, actually, came out in May, and it was the May 12 puts, lighting it up to the tune of, about starting it off the day about 2,000, just gobbling them up pretty much above the offer, doing them for $1.15 at the time. So the stock could have been selling off. They could have been scrambling, coming in to chase, lift some offers. These are all opening. There's literally no open interest on this strike, so it's clearly opening. Also worth noting, later on in the day, we did see about 7,500 of the 12 half puts in May also come up. Looks like a lot of those being sold for around $1.10 So perhaps, the numbers do line up at the end of the day with perhaps a bit of a ratio, 1-2, 3,400 on the 12s and about 7,500 on the 12 halves. So not quite, but they all come in pretty close. Also worth noting, about 5,600 of the 12 half puts open as well. So it could have been some potentially closing and rolling. Either way, you pick a strike that had OI today. In good old Chicago Bridge and Iron Company, it was lighting it up. We're going to focus instead on these 12 puts, clearly opening and a decent-sized block, pretty much half of their ADV in this one trade. Let's go see how the year has been for our friends here at CBI. It has not been a favorable one. They kicked off about a year ago right around $31. And as I said, they're a bit shy of that. And actually, they got less than that. Back in August of last year, they were trading in the 9 handle. So they've since rebounded from that. They got as high as 20 again. So a year ago, they were 32. They got down to 8 on about 9, actually, then back up to 20. And now back down to around, actually they hit a 12 handle today at one point before rebounding back to 13.38 where they closed out the day. So you might see, Mr. Rock Lobster, why someone might want to scoop up some puts out here in good old CBI. What say you for our friends at Chicago Bridge and Iron Company, sir? You think these puts are perhaps indicative of the way forward?
Do you think this could be a put in stock trade? Do you think that's possible?
No, it did go up as buy right, so there is quite possibly a good stock component. Let me pull up here, see if we did see some paper today.
125,000 shares traded 12.90 at 12 minutes after the open this morning. That's saying that was marked stock and options, so it maybe, but it looks like this trade didn't happen until later in the day on the Philly.
This went up way later in the day on the Philly, so that would be quite a disconnect between the stock and the options. But it could. I've seen maybe not too much weirder things, but I've seen weirder things than stock going up many hours apart from its options. They just forgot the options leg.
Yes, exactly. Like, wait a minute. Can we print this? So a very interesting. Another thing too is not inexpensive volatility for a $13 stock. I mean, you're paying $1 for the 12 put. The stock's had some problems. It looks like some write-downs. I think this is maybe something to be watched, but a possible, high potential movement coming on us. I don't know quite what the company does. Some kind of industrial iron making company. Has probably been around for 100 years or something like that. But it's the vol looks pretty high to me, to be honest. Even though earnings are coming out, actually they're out after the close today, I think. So somebody's looking for they're looking for some action. They're looking for a move. And I would guess, at least from the prints in the paper going up, is they're looking for a pretty big move. Just don't know which way it's going to be.
Yeah, let's see if we can get got this weird stuff coming up here. If we can get an after-hours quote here. That's better. Yeah, they're off about a whopping 3 cents. I think they got the lion's share of their move intraday, so they may have actually released them early. I wouldn't be surprised, given those numbers we're seeing, if they did indeed come out early, hence that big sell-off. Let's move on to another one. Keep an eye on our friends in the Chicago Bridge and Iron Cup. We're fans of their bridges here. They work. DR Horton, this is a home builder closing today, our ticker symbol I should say, DHI closing today right around 43.5, up about $0.50 or about 1%. This is the name that does about 5,600 contracts a day. Today doing about 27,000, nearly 18-1 calls over puts, and of that 27,000, nearly 20 of it, about 19 and change, come in pretty sizable upside activity on the May 48s. We first noticed about 17, almost 18,000, a massive block going up. Paper just pretty much crushing the bid for 19 cents, 17,727 times. As the day went on, a total of 19,000 and change going up. All this opening because only 2,000 contracts open there. So it seems like earnings, also worth noting, they have earnings on the 26th, so this will have a little bit of earnings juice in it, even if it's not specifically an earnings-related play. But Mr. Rock Lobster looks like it has the whiff, the air about it of a bit of an overwrite. Let's look at the chart here and see what our friend, if he's gone nuts or if there's some method to his madness. Oh, about a year ago, we saw DHI trading $33. Then it kind of went on a rampage towards the end of last year, hitting as high as 52, 53 actually, and then kind of shooting right back down to where it is now, 43 and change. So Mr. Rock Lobster, our friend here, perhaps deciding to split the difference, 48, a reasonable midpoint between those. And if it hits there, he's happy to dump his shares and also keep his 19 cents. What say you, Mr. Sir, about this little bit of earnings-related overriding action?
I never can get excited about 19 cents. I guess somebody owns it.
I knew that wouldn't blow your skirt up too much there.
It just seems like somebody just owns some stock and they want, I don't know. They want money to gas their jet with. It could be somebody that owns the stock and they're like, well, this will pay for gas for, a month. So I'll sell a bunch of calls for 19 cents and everything should be okay. I don't know. That's how I feel like the plutocrats live somehow. I'll just sell some calls against my stock and let's rock and roll with that. So that's about what I think about that.
The plutocrats. Well, a nice 360K, that'll fill up your jet for a while. Maybe even get you a little small jet, So, you do it 19,000 times. Things start to add up, even if it isn't. And it's worth saying we have seen worse. We've seen people doing 6 months for 7 cents and things like that. So this one certainly is not the worst of the overwrites, even if it isn't. It's kind of like, sizable, it's interesting. Perhaps yield-wise, it's not. Let's wrap things up here. This is an interesting one. Good thing the Viceroy is in here. I think he would look askance at this trade. Let that last one, 13 and change, was too rich for your blood, listeners. We got you covered here to close out the odd block with CBL and Associates Properties, Inc., ticker symbol CBL. This is another newcomer to the odd block. Closing today, $3.85, off a dime, or 2.5% in this cheapy name. And this is the name. Let's see, how much do they do, even though the stock is an option at this point? They do less than 1,000 contracts a day, so right in the odd block ballpark. Today doing 18,000, so lighting it up. Worth noting they have earnings coming up on the 26th, so not quite today, but still lighting it up today, including just a ton for this name, 16,532 of the SEP 2.5 puts going up for 15 cents. Let's see, pretty much, right on the, they lifted the offer, which, no surprise, get anything done in this name, you're going to have to pay up. They're lifting offers on these puts, so they're stopping themselves out at a nice $2.35 all the way out through September expiration. Let's look at what's been up in this name. They've had an interesting run. About a year ago, they were nearly $10. And in fact, they were exactly a year ago, they were $10. And now, how the mighty have fallen. Maybe not so mighty, but meager have fallen and become even more meager, as now they are pretty much a third of their former selves. They got their wings clipped pretty good back in November earnings, and they'd never really been able to recover that. Mr. Rock Lobster, I know your views on options on sub $5 names. What about your views on hedging said $5 names with 15-cent puts? Let's say 17,000 times for the sake of argument.
That is a sizable bid. And something's up with the company in general. It looks like it makes money. It pays a dividend. So and they've had to cut the dividend. So there's some sort of there's a very funky story here. Maybe somebody's trying to do some sort of value play with the company, but it looks like that has all the look of somebody that wants to buy stock and buy puts from kind of where I sit on that. I was looking at time and sales. We can get anything out of it. No big stock blocks going up, at least that I can see. Nothing of any real, nothing close. So maybe just somebody holds a bunch of stock and or they're trying to build some sort of position. This is some sort of takeover, or not a takeover, maybe just a protection trade. But it's just, I'd say whatever's going on, it looks like an odd story just from all the dollars flowing into it, the dividends that flow out of it. It doesn't make a whole lot of sense if it pays an 80-cent dividend. The stock's worth $3.85. So something is askew in this one. So I just think it's a weird story, and I'm not quite sure what it might be worth taking a look at, though, because clearly something's going on that somebody thinks is worth buying 16,000 puts over.
Yes, not quite a takeover, maybe a take under a foot here in good old
take away.
Yes, a takeaway. Give me that stock back. You don't want that anymore. Either way, someone perhaps a wee bit nervous looking over their shoulder there in not in CBI. This is CBL. CBI was our other name earlier today. Either way, interesting stuff. Some puts to profile. Maybe we'll keep an eye on these bad boys to see how they turn out. Always interesting to see people spending size money. We just talked about someone wanting to collect that 19 cents 19,000 times. Now someone's spending that 15 cents 17,000 times. Well, you're not going to do that. It's a nice little jet or perhaps or a little prop plane at least, or these puts. So you're probably not going to do that unless you got some concerns. So one to watch here perhaps in CBL. Speaking of things to watch, though, or perhaps listen to, it's that time again. It's Monday. It means it's time for Uncle Mike to hold court. It's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody. This is the portion of the show mixing things up a little bit. We used to do Monday mail block, mixing it up, do a little Monday strategy block. Better for his schedule, better for ours. More fun for you guys. Kick off the week with a little bit of some strategery. Now, you know, we are playing in and around earnings season, so a lot of things have a bit of an earnings bent to them. In fact, while I was trying to do the odd block, Uncle Mike, my birdies kept tweeting and pecking in my ear, saying things about collars, and they were pointing to the screen at alphabets right now. So I'm assuming either they collars in alphabet or perhaps more likely, because they're not quite that specific usually. I'm going to think they're going more broad. I'm going to think collars around events like earnings, maybe? How does that sound? Am I interpreting their pecs correctly? Have they earned their birdseed today?
They have. Give them a little bit extra birdseed and give them one of those little suet packs that you buy at the grocery store that has all the sweet stuff in it.
Wow. We don't go that far. I'll have to investigate these suet packs you speak of, sir.
I think you should. So, but yeah, tis the season right now, folks. It is earnings. And I was talking with a client last week. And when I was talking with the client last week, we were talking about ways, just kind of having a general conversation of ways to hedge various stocks. And when doing so, of course, the first thing that always comes up with a hedge is a collar. And of course, there's advantages and disadvantages to that. The traditional collar, of course, XYZ stock is at $30 a share. Then let's say that you sell a 35 covered call, and with the premium you collect, you buy the 25 put, and it becomes a zero cost trade in theory. Of course, it seldom works out exactly like that, but that's the concept behind it. And then you get actually $5 of potential gain, but you only have $5 of potential loss. So if things go really bad for you, then you know that you're only going to have the $5 of potential loss in this instance. But in reality, a lot of times when looking at earnings can definitely move a stock a lot, no doubt about it. That's what we talk about on this show quite frequently, and it definitely can and does happen. But with that in mind, does that mean that a stock is going to be going bankrupt because of earnings? Well, of course, it's possible, but it's not really probable most of the time. So let's say that you own a stock and you're concerned that, you know what, either I think that we're going to have a bad earnings announcement, or maybe it's going to be a good earnings announcement and the market's going to sell on good news because the stock's had quite a run up, and you're concerned with just a little bit of a downturn because of the earnings coming out. Now, back in, I believe it was maybe 2013 or so, 2012, 2013, around that era of the show, I would do things like this very frequently with Apple back when I was very aggressively trading Apple. And so the concept behind this was I did a few things with it. I did it also with some back spreads, and I did a bunch of stuff with it. But in the most basic sense of a way with which you can collar going into earnings, I'm personally a fan of the knockout collar. Now, here's what I mean by the knockout collar. Let's say that XYZ stock is trading at $100 a share. And you believe that, you know what, these earnings, it's kind of concerning to me. I don't want to be owning a stock that's at 100, having it go down to like 92 or something like that after earnings. But if it goes up, I don't know if it's going to go up quite that much. So what's something I can do? Well, let's say in a traditional collar, you could sell the 110 covered call and you could buy the 90 put. And it's a cash-free trade, meaning the 110 covered call finances the 90 put. Well, that doesn't exactly give you what you want, because if your concern is the stock going down to around, say, the low 90s, then if you hold that collar till expiration, and even if the expiration is maybe a couple weeks, who knows? It just depends on where the vol is. That's really not going to help you that much, because of the fact that if both those options do expire worthless, then that collar did you absolutely no good. Now, with that being said, what can you do? You're not concerned about the stock going bankrupt, but you're concerned about a little bit of a pullback. Well, that's where a knockout collar can come into play. Instead of buying the 90 put with the money you took in from selling the 110 call, and instead of using the premium to buy jet fuel, as Andrew said, what you can do with it is you can buy, say, a 110.95 put spread. Same expiration, or I misspoke, a 195 put spread, or perhaps a 190 put spread. And by doing that, a lot of times something like this is a way with which you can have more immediate protection. And by immediate, I mean protection from where the price is at that time. You won't have to wait until 90 before your protection kicks in. You'll have protection right away. Now, as with any option trading modification, there's trade-outs that exist. So now if the stock were to go to zero, then you're only protected down to 95 or 90, depending on where you sold the put. So that's one thing to keep in mind. Now, once again, if you're not concerned with the stock going to zero, if you liked it at 100, you'll love it at 86, then it's not a concern. Then it's not something a concern with which you should pay for. Second thing to keep in mind, upside is still limited. So if the stock does go to 116, you're only going to profit up to 110 in this instance because you sold that covered call. But once again, by comparison, your upside limitation is identical. So let's say going into earnings, you own a stock, maybe it's had a little bit of a run up in value. You want to have a little bit of protection to the downside, but you don't think it's going to go down to zero. The knockout collar might be something to consider. Now, why is this called a knockout collar? Well, the second you get below the short strike price of the put, you are knocked out of your protection, hence the name. So with that being said, that is today's strategy block for April 23rd, going into earnings season.
Thank you for that, sir. We still got a little bit of time, so let's get some of you folks on the old show with a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is indeed the portion of the show where we break down the weird, the wild, the wondrous, the interesting paper that is lighting things up over here. Well, actually, that would be the wrong segment. I'm looking here at my screen. It's got me thinking on block mode. But actually, we're talking your mail. It is the Mail Block here. The reason I'm looking at that stuff is because we got people chiming in as we speak. Like Scott Sommer asking, hey, I didn't know CBL still had options. What is the low price criteria for delisting options? You know, it's an interesting question. It kind of varies. In fact, I was trying to pull up a standardized level for that there on OCC, and they kind of bury it in their circulars. So there's no real, at least not easily, I haven't found it yet, where if it hits X amount of time for the X value by this amount of time, then it will be delisted. Of course, if it's delisted, the options don't just go away immediately. The ones that were listed still have to trade, and if as one by one as they expire, no new ones. will be delisted. So it is possible even for a name like, let's say, a CBL, if it continues to go south. These DESs, or the SEPs our friend bought here, 2 halves, won't go away. They will continue unless the company goes away, obviously. But it just won't add any new ones. Mr. Rock Lobster or Mr. Uncle Mike, you guys, off the top of your heads, know the criteria for delisting?
Well, all I know is that if the exchanges think they can make money listing them, they'll stay in there. So
yeah, they're not really in the game of taking things off the board anymore. You know, they want to add things to the board because they know, they see what everybody else sees out there. 19 names do about half the volume on any given day. So you start pulling things off the board, that universe grows smaller. So they want to add more names to the pie, like the snaps and the spots, rather than take things away. Speaking of taking away, VIX gives and takes away. We asked you guys last week. You know, VIX at the time about a week ago was back in the mid-teens, pretty much where it is now. We asked, are you guys buying this? Do you think it's the calm before the storm? Where do you think it's going to settle out? 39% of you saying it was going to settle out lower, so 14 to 16. And where actually did we? Let me pull it up here. Let's go. Where did we go out on Friday? So we have the exactly who was correct. Winner, chicken dinner. We went out at VIX Cash, of course, talking 1688. So no joy for the 14 to 16. Actually, 24% of you said right here 16 to 18 win the chicken dinner. 19% say 18 to 20. Unfortunately, you were wrong. 18% saying even higher, 20 to 25. Unfortunately, you were horribly wrong. Now you see how hard it is to do that crystal ball that we do every week over there on the Ball Views. By the way, we also asked you guys last week, you know, there's a new exchange coming out of MIAX proposed for Q1 of next year. It's going to raise the total number to 16. This one surprised me. We asked you guys, you think the more exchanges, the better? Please make it stop, or I don't care. I get filled either way. I don't really care how many exchanges there are. I thought for sure it would lean towards don't make it stop or perhaps don't care, but actually 44% saying the more exchanges, the better, which is a head scratcher to me. I did not expect that. Maybe the exchange folks in our audience rallying to this one. 34% saying I don't care, I get filled, and then only 22% saying please make it stop. So that one kind of surprised me. I do have to say, I thought for sure we would be. I'll be bringing that up when I go down to the Options Industry Conference in a week or so to start chatting with all the heads of the exchanges. Maybe it isn't as big of an issue as a lot of people think. Let's move on to our question of this week, and we're asking you right now. Just went live before the show. You guys know we dig up a lot of weird options, positions, and trades here on Options Insider. It's kind of what we do, amongst other things. And we talk about them a lot on this show and others, but sometimes we find ones that are kind of just weird, and we wanted to put it to you guys. Which of these weird but sizable open options positions right now do you think has the best chance of actually becoming a winner, actually expiring in the money? Of course, we'll start things off with our old friend, the 49,000 or so of the Tesla Jan 2019 50 puts. Got to put those in there. They kind of kicked the whole ball rolling off there. Then we got 197,000 of the VXX Jan 2019 10 puts, also sizable, also far out of the money. If that's you want to go more shiny stuff like Uncle Mike, perhaps maybe you want to go GLD, in which case you got 65,000 of the GLT Jan 2019 200 calls. GLD in the about around 120, I believe, right now or so. And that's not enough for you. We got 146,000 of the SPY DEES 2019 150 puts. So a little bit out of the money there as well. Let's go back around the horn. Mr. Uncle Mike, which of these four do you think is your choice? And also, more importantly, what is our audience choosing?
Well, I can't go with those 150 puts by any means for SPY.
That would ruin all your branding.
It totally would. So why not? Let's go for the gold. Let's be bullish on gold by all means for both myself and the audience.
Interesting. Mr. Rock Lobster, no VIX, but there is some VXX here on this list. So which one are you picking, and which one do you think our audience is picking?
I think the 10 puts actually are theoretically probable to go in the money for VXX. So I think I would pick that one as at least the best shot. But I'm thinking the audience being how they are, they might be going Tesla. That's where I am. Just because what the heck? So is somebody else with Tesla. So
yes.
They're jumping on the bandwagon.
Tesla has that name recognition, but of course 50 is pretty far out there. 10, you're right, of the two, 10 from 42 seems a little bit closer than 50 from 280 or wherever Tesla is right now. But still, so yeah, I think theoretically the VXX puts, I certainly wouldn't be averse to those lighting it up myself. So if that were to come to pass, I guess I'll probably have to vote for those. Our audience actually is also voting for those. 35%, still pretty even, early voting. 35% saying the VXX puts. 30% a tie, number 2 for the Tesla and the GLD, Uncle Mike. So your GLD hanging in there with Tesla. What do you say to that?
Ooh, wow.
And only 5% going for the D SPY puts. So no one thinking SPY, not quite cut in half, but let's say by about a third or so or more between now and next. Remember, that's December of next year. That's a long way. It's the longest one out there. But still, no one's seeing SPY getting its legs cut out anytime soon there. Let's see if we can do another real quick one like we had before. So many people writing about Twitter. There's a ratio spread one, but this probably take a little bit longer to do. Best ways to trade puts. We could spend an hour on that one. Let's see. I think we talked about this one before. I think we're talking. This sounds familiar. Stop me if we've done some before, Mr. Rock, or a similar question at least. LNC wants to know, SVXY calls suck now. What about selling the puts? Any juice in those? They've been drained as well by the big, I think he meant big redo. He says this came in a while ago. Obviously, it came in a couple, if he says last week. So yeah, obviously SVXY calls got cut roughly in half, at least from a vol perspective. I don't know many universes where the calls would have that happen to them and the puts not really follow suit. So the puts are kind of, if you think the calls suck, the puts pretty much are going to as well. I don't know, Mr. Rocklops, do you agree? You think selling the puts have lost their luster in LNC? Of course, flip side, the chance of it having blow through that strike, obviously, much less.
I just, you know what it is? It's just, this is a symptom of this generation where everybody's like, I want none of the risk, but all the return. Everybody's stupid. Like the pro shares people, I think that run SVXY, they're stupid. They wrecked a product. What they did, I think, was almost criminal. So you know what? It's all stupid. So I would not waste your time with it. It's like, just trade half of VXX. All you're doing is instead of doing 100 contracts, it's like you're shorting like an option contract with only a 50% of the underlying. It's you know what the experiment is? It works as well as about the 10-to-1 mini options. You remember the minis? Everybody thought those are going to be awesome.
Yeah,
and then everybody realized,
for 3 weeks.
The commissions are the same and I make only a fraction of the money. So I think SVXY as the product it worked. It was a dangerous product and now they just made it a stupid product. So again, it does what it's advertised and now it's just going to, you know what it is? It's going to be a very slow way to short vol. So, if you have about as much time as Methuselah, I think it's a great product. If you don't, you might want to try something else. So it's probably like a covered right type of thing. And then, when the vol falls apart, it's not going to do much. Right now in the vol regime we're kind of like backward. We're just a slight contango or whatever, but it's just that thing is going to take a while. So if you think that there's any shot that product will be back to $140 in a year, forget it. It ain't going there. It's going to take for frickin' ever to get up to those prices. And you just have to learn different strategies, which of course why I have the vol newsletter, which is doing great. So you can either learn how to trade volatility right, or you can keep doing stupid stuff like trying to be long SVXY. So it's up to you.
So there you go. Let me summarize for you. All people are stupid, says the Rock Lobster. In particular, all people who trade SVXY. Doubly stupid. But so there you go. All people are stupid, but then if you trade SVXY, doubly stupid. There you go. Put that in your pipe and smoke it. Send your emails, andrew@optionbit.com. Meanwhile, we got to keep rolling. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Some people pointing out here, too, that the notion of what a winner is with these options positions is different things. You could buy those VXX puts right now for like 3 cents. If they go to 10 cents, that's a winner, especially if you sell them. But I'm talking strictly in the old sense of they will expire in the money, or at the very least close close enough to it to make some money off these things. So that's our criteria for what a winner is. Let's go back here really quickly and check in on our friends. Speaking of winners, these ones not so much. Google, though, or I should say Alphabet, having peered its losses, only off about 2 handles right now. So it seems like it's had quite the topsy-turvy after hours, getting as high as 11.10, getting down as low as 10.69. So it's kind of been all over, then back and forth. So if you were gamma scalping in the after hours, you've done all right so far, even though the net move is not. And if you sell in premium and you kind of popping your tums and sitting on your hands, at least so far, you're kind of doing all right too, as long as you're not locking in those bad hedges. All right. Speaking of which, Mr. Rock Lobster is getting your love on Twitter. That's what we like to do. We like to send the love. Speaking of love, send some love back our folks' ways, Mr. Rock Lobster. What are you watching the rest of this week?
I think we should just do an angry show one time. You know, we all just drink like, a 6-pack and then just like get angry on the whole show.
That could be one of our premium shows, getting angry. Yeah, exactly. Getting ornery with the Rock Lobster.
The angry show. SVXY makes me angry because I think those they were dishonest, the managers of that fund, by doing that. It's one thing that they screwed up, when they just kind of did the forced close. And then it's another, they compounded the problem by just screwing everybody on the underlying. But that's another show. What are we watching? I want to see if the actual tech earnings can produce a higher SPX. I share the Tosaw thing. Still bullish, still very bullish technology. Not going away with that. It is down 10% from the highs of this year. But, it's still doing okay. But I think that there are headwinds. I think the interest rates are headwinds, 3%. We had the internet boom in 2000. I mean, that's 18 years now ago, but it's not like we can't rally with interest rates going up as long as there is, demand for capital and stuff like that. But we weren't running $1 trillion budget deficit either back then. So I think that we're going to need to see more better stuff out of government or something to get the SPX. We need to kind of to shake the cobwebs off a little bit. So it's good to see that Google is making a ton of money, which is not a big surprise. But we're going to need to see something great to see the SPX get to all-time highs. And I don't know if we're going to get it anytime with this earnings, because even great earnings out of Google and just nobody cares. So that's not a great sign if you're like an ultra bull in the short term. So again, looking for vol to go a little lower this week, actually a lot lower. At least as of this, out of this Google report, I'm not quite seeing those futures move that much. So not a good sign early on. Not a good sign early on.
Uh-oh. Take that, our resident Ultra Bull, Mr. Uncle Mike. What say you to that, sir? Shots fired across the bow.
There's a whole lot of football to be played. Like one time, if the other team is up by 7 points in the first quarter, the one thing that I'll tell the boys, 7 points will not win this football game. And the Google earnings report is just a 7-point analogy, so to speak, and that Google earnings will not be the only thing that affects the rally with which we are about to get, possibly. I'm of the school of thought right now that it seems to me that in the Trump era, rallies come like a thief in the night. It kind of started on the election night, and it kind of hasn't really stopped. A lot of the rallies with which we've had have been unexpected. So I don't think that the government's going to need to do something good to get a rally, quite honestly. I think this is there's a lot of unexpected rallies that happen in the last since Trump's taken office. So other than that, I'd say I'm pretty much in agreement with Andrew. But with that being said, I think that the market can rally on nothing. After all, remember, Donald Trump is not a 9 VIX president, but yet he was. So I think that the unexpected is to be expected. And that is my thought. And what I am looking at over the course of the next week, the unexpected.
Expect the unexpected. I like that. Speaking of which, what were you saying before, Mr. Rock Lobster, about going back to our odd block name, CBL there, saying, it had a decent dividend. Caleb Trader agreeing, saying, yeah, that those 15-cent puts are actually a cheap hedge when you're getting a 40-cent distribution to be long in the meantime. So there you go. Someone else concurring with what you're saying there. Of course, that music, listeners, means we're done for this show. What a journey it has been. Let's just recap really quickly. Talk some crazy Tesla puts, some other funky puts, cheapy stocks, talked VIX, talked some precious metals and the vol they're in, talked a little bit of Alphabet, market loving, then hating, then kind of being on the whole thing. And then, of course, all your questions about delisting and your voting. Surprisingly, not caring about 16 exchanges. Lots of weird stuff going on there, including wrapping it all up with Rock Lobster saying, you're all stupid. So there you go. Maybe if you don't want to be stupid, if they want to get unstupid, Mr. Rock Lobster, where should they go? What should they do?
Well, you can go get my vol newsletter. It's off to a good start. 8 wins, 2 losses. Through a very difficult vol environment. So if you actually want to learn to trade volatility and not just be a slave to the short vol trade, which usually is a pretty good trade, and actually learn to trade the vol, stop on over, show you how to do it. Just subscribe, and in a couple months, you'll learn how to trade some vol. So there you go. Stop on our optionpit.com and look for the volatility newsletter.
There you go. Get de-stupefied. Let the Rock Lobster de-stupefy you. Head on over to optionpit.com. Click on that link. Then you set it and forget it. There you go. He will de-stupefy you. That should be your next webinar. De-stupefying VIX. There you go. We're creating new words and new terminology for you every time here on the show. And Uncle Mike, people want to perhaps have someone to help them in that de-stupefication process. Maybe they want to do a little skew in the meantime. Maybe they want someone just to take this whole thing out of their hands because they're just throwing their hands up saying these option things are crazy. Where should they go? What should they do?
By all means, call me, 312-212-3531, and we can discuss long-term investment planning while using options. I'm of the school of thought that options can be a very extremely vital part of your long-term financial plan. And I believe in it, and I've been doing it for quite a long time now. So if that's something with which you have interest or are intrigued, give me a call, 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
Wait, options? This show is about options? Oh, I'm on the wrong show. I thought this was about the 30-year. I thought this was about Bund futures, actually. So I need to go hit the wrong. That's way too exciting for my blood. If you want to hear about those crazy options things, hit up Uncle Mike M. Tosaw at rcmfs.com to learn more. Let him help in your de-stupefication process. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I thank all of you out there for listening, downloading, streaming, sending in such great questions before the show, after the show, during the show. Keep us on our toes. We love it. And we'll see you back here on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.